Hi, everyone. So glad that you guys can join us for another episode on the Teens for Business podcast. I'm your host, Jack.
I'm Ivan.
I'm Jackie.
I'm Kylan.
Today, we'll be talking about youth investments, its positives and negatives, and the realities and fantasies of youth investments and how they can impact teens. So, to start off with, do you guys have any investing accounts? Do you guys invest basically?
Yeah, so I started 2 years ago, like in the midst of the pandemic. I personally started using Fidelity and their youth account. They basically allow teenagers to open investing account and pretty much purchase stocks on their own compared to custodial accounts where parents have to manage it. As for if it's going well or not, it's kind of like 50-50 right now because most of my stocks that I'm holding are from around 2 years ago. And that's when a lot of stocks are peaking. And so like some of my stocks are down quite a lot, but I'm still up on my initial investment. So I think that's pretty good.
I mean, I
Yeah,
can
oh,
also
you can go
kind
first.
of, but uh, me personally, I do have a Robinhood account, and everyone says that Robinhood is bad, but whatever. But it's the state of the portfolio right now is definitely not great. It peaked during the pandemic, and then I lost everything. I lost all my gains, but that's but I haven't lost any money. I just lost all the gains. But yeah, it's all basically parents put some money in and said have some fun.
Um, for me, I kind of just do it with my dad. Like I more so do it for like the experience for like when I actually turn 18 and start making money like that. But right now, I just have my dad like technically does the trades, but like I'm like, okay, I like research all of it. And like he's the one technically placing it. Because it's more so like learning about the experience and seeing like, oh, oopsie, that was not a good day, or like, oh, that was not a good move. But I started like Kaiwen, like somewhere in the midst of the pandemic, and I think the first stock I bought was Tesla, and at the time it was like a really good purchase, and this was before they like split. And like I remember buying it at like slightly below $600, and then at like its peak, I remember it being like over 1,200 ish, and I remember being like, "Oh wow, guys, look at that!" And then it went down, but you know it's okay. So it's
It's a
kind of
good
been like an up and
experience.
down. Yeah. What
Yeah,
about you, Jack?
yeah. So I actually started investing in early and mid 2019 going into 2020, like a little bit before the pandemic, and definitely had a good portfolio going into the pandemic, and it kind of went down, but then it went back up, and then in 2022 after the economic state it started to become a recession, so everything went down. And speaking of which, most of you guys mentioned your portfolios have been going down recently. Like Ivan, you mentioned losing all your gains. Ivan also lost a little bit, but still still earn some money. And Jackie, you said your portfolio is also I mean, your specifically your Tesla holdings have been decreasing in value. So what do you think the current state of the stock market is? Because it's obviously been it's been going I feel like it's been going down, but how bad do you think it's gonna be?
I mean, uh, I remember I'm not that into I barely check my portfolio now because don't really have time to. But I remember during the pandemic, like a year or 2 years ago, I would constantly check Reddit. That's when the heyday of people doing random stuff and then boosting extremely bad stocks and then everybody losing their minds. But now it's um kind of depressing in my opinion because all the tech companies, all the companies that you thought would do well are not doing well.
Yeah, honestly,
Mm.
I read an article over the past few days that I feel like that especially the some tech startups and tech companies haven't really recovered from the pandemic. and their stocks have been they have been like dropping. Like for example, like in 2021, 2022, I bought Nvidia because I thought it was a good buy, but now it's down a lot, so they haven't really recovered. So
Yeah, I agree. I think this entire year, I mean, with like inflation and interest rates, just like they're just like skyrocketing, and like the stocks are just, it hasn't been a good year for stocks in general, especially in the tech sector. It was like during a period during the pandemic, like it was at a point where like stocks, it was like impossible for them to go down. So I think everybody was just like, there was so much hype surrounding it that like people were like very unprepared for the following year and the recent like the recent fall.
Yeah, I
Yeah.
think so.
yeah,
Well,
so wait, so
yeah,
like you
oh,
guys all like discuss like the stock market being down. Obviously, in 2022, we had huge amount of inflation around around maybe spring going into the summer of 2022, and then continuing into the fall and into the winter. So like and now we're in 2023 and we're still like seeing some similar trends. And like I feel like it could be like relating to the current state of the economy. So like some most economists predict an early recession in 2023, but then maybe a little bit of a rebound in like late November, December of 2023. What predictions do you guys have for the stock market for like the rest of the year according to these like economic projections?
well, like everything I've read so far is saying that we're getting to that recession. But as far as I know, um, inflation isn't quite as bad as it was a few months ago, but it's still quite bad. So for predictions wise, um, I wouldn't say the market would be going up, but think, I wouldn't want to think that the markets will also go down too much.
Yeah. Because I've been reading a lot, and I know like a lot of professional analysts are very like pessimistic, and they're like, "Oh my God, it's going to be really bad." But I don't know if it's like kind of a contrarian view to be like, I don't like, obviously I don't think it's gonna, like Ivan said, it's not gonna go up again or like a lot, but I don't think it's gonna be like horrifically bad. I don't think it's gonna go down by a lot of points because a little bit ago, like wasn't there a really bad market because of like interest rates and because of like how much the Fed kept increasing them? And like I think that like you have to reach a point somewhere that where you're like, okay, we've done enough, like we can't always be increasing interest rates. And I think like when we hit that point, or like because it's already kind of started happening, so I don't think it's going to be like really really bad in the like foreseeable future.
Yeah. I also like read an article recently. I think they said like economists are like predicting that like the first half of like 2023 at least will be like a US recession. But like looking at like statistics, like the labor market has still like remained pretty resilient. Like the US economy added 263,000 jobs in November recently. So because all these people are predicting like the labor market will be the final thing that's gonna fall and many people will go into unemployment. I just like, you want to be optimistic, and like I don't really think that like um anything like super bad is gonna happen. I know like these things are predicting for this, but like based on what we've seen so far, it's, I also agree with what like Ivan and Jackie said.
Yeah, I just feel like yeah, I want to like echo those points. We definitely need to be optimistic about those like future, maybe a few years into the future when like the recession isn't as bad, maybe we could return to like our maybe our pre-pandemic levels of like investing. And like all right, so you all have like mentioned like you started like investing around the pandemic time. I started a little bit before the pandemic time. At that time, did you feel like it was a little like morally acceptable for you guys to like start getting investing, or did you think it was like too early? Like, do you think there's a minimum age that people can start investing at, or no?
I think that's like really dependent on financial situations. Like, obviously, I don't think I would feel good if I was allowed to put in like $10,000 into the market, but like some billionaire's child, they might be like, okay, that's fine because like my parents are really rich. And I think like a lot of it depends on like your family. Like if you guys are struggling to put food on the table, I don't think it's a good idea or like one of the best ideas to allow a 14-year-old to put thousands of dollars into the market, because at the end of the day, like you need to have your basic necessities. But if you're able to, and like the parents are like, yeah, like this is something we want to like encourage our child to do for the future and like teach them to like invest, because like having that experience is a good thing. Like if financial situations allow for it, I think it's a good thing, and like people, like children should be able to have support from their parents and invest.
Yeah,
Yeah.
definitely. But I think starting too early also has like kind of bad effects, negative effects on like habits and stuff, because like personally from what I've seen from other kids at my school is that when they start investing, like they don't really start investing with their own money. They like a lot of kids choose to go through the investing competition, such as like personal, what was it called? The
Important one.
stock market game.
Wharton.
A lot
Oh,
yeah, the
oh,
stock
like
market
a
game is
just a
more,
game. Yeah, yeah.
yeah, like it's really really extremely popular, but like a
Mhm.
lot of the strategies they use are extremely unrealistic. Like one of my friends actually got into like top 10 in the nation because he shorted like short, his only strategy was shorting stocks. um and like he got extremely lucky, and then from all those shorts, and it, like everything just went well for him, right? But that's only him. Like other people I know who also use that strategy started off well, but like near the end of the competition just lost everything because of that strategy. So it's like extremely unrealistic. And I think like if you start too early, it might be easier to pick up these bad habits from like Reddit, like or Wall Street bets. Like it's like a lot of
Yeah.
bad habits going around. So I think starting too young is probably not a great idea. And like it's really important to say what can and what you can't do as a child, because those habits will carry over to adult, and when people have more money or kind of get addicted to kind of stock trading, which is what's happening recently, right? It's
Yeah,
like
like becoming like
Yeah.
gambling.
it's basically gambling with everybody wanting to become a day trader, right?
Yeah.
Mhm.
Yeah, I feel
Yeah.
like when you're young, like when you're young, sometimes you want to like maybe like experiment with strategies and maybe, oh, the strategy worked this time, oh, it didn't work that time, and maybe we can like make judgments off of that. But like may it's like some of the times like those strategies like they just work based on luck. And like if you're like too young to understand that, you're just like, oh, this strategy worked, it's not, and it doesn't come to you that it's like based on maybe like luck, and you keep using that strategy, like you will lose. I feel like you could lose a lot of like you could lose a lot of your like, money and like stuff from simply like being unexperienced, not doing enough research and stuff. What do you guys?
Yeah, I definitely agree. But like I think a major part of like starting early is for the experience. But like if you're handling like real money in like a real like in your own account, or like it's your parents' money, if you're just starting off as a teenager, usually they give you, I don't know, a couple $100 to maybe start off and just test out your knowledge, right? You're trying to gain experience. But I agree, like at a young age, it's like you're very impressionable and you're just going on social media to kind of gather insight on different investments and whatnot. So like my recommendation is probably like before you start trading real money, you should probably do some like like paper money, like with these different portfolio simulation, like online portfolios. You can like enter contests and whatnot. Like with that's not real money. You like like try to trade responsibly for a while, like 1 or 2 months before you actually start using real money.
Yeah, I agree too. Like there's certain competitions, like the Wharton investment. I think that's a good competition because like they kind of require you to analyze all the stocks you want to invest in by yourself. Like you have to like analyze as compared to like um you know other competitions such as SMG. Like maybe they're just going off of what Reddit says or like what they think is good, but like some competitions force you basically to like think about your actions by yourself instead of like listening to someone online who probably also doesn't know what they're saying.
Yeah, that's a good point about like listening and taking influence and making sure the people you take influence from are actually like reasonable and they're not just like regurgitating something else that they heard. And then like that kind of brings me to another point of like parents and like obviously it's very like very beneficial and like I come from a place of privilege to be able to say that like my parents have like helped me a lot with like investing or like being like, oh, I don't know if you want to do that, or like, okay, you can like try to do that versus like whatever is going on. And like I think obviously if someone has that advantage, it might become a lot more, I don't want to say easy, but like it might be, they might have like a higher starting place than someone whose parents don't invest or like don't have the knowledge to give to their child that.
Yeah, absolutely. Personally, my investing experience was when I was like still a little bit of a beginner investor. My parents would actually like, give me a few like stock recommendations to like maybe like research and evaluate like what's going on with this company, maybe some news surrounding the companies. And I feel like that's important because like sometimes like the prices can go down like, and when you're young, maybe people like tell you, oh, they go down because of like some they they tell you that like maybe the stock like price goes down and it could be a little bit normal, but then but also I feel like sometimes with these like news like with stocks like because news can like impact like, so for example I feel like in the past like Elon Musk, whenever he said some like controversial stuff, Tesla, SpaceX, and all his other holdings like go down like significantly, and I felt like Jackie definitely experienced that like the COVID time. So like what do you guys like think, like I feel like, do you think that young experienced like investors, should they like follow news about their companies and like keep up to those in addition to like their portfolios?
Yeah, definitely. I recently did research about like Twitter and Elon. Like, I think that whole like thing had a lot to do with Tesla stock declining. Like, I'm looking at a year over year from their peak, this year, which is like 384. They went down like over 70%, and reportedly a lot of that has to do with um his actions on Twitter. Because like recently a poll vote showed how like people wanted him to step down as the CEO of Twitter, and Elon's trying to manage both companies effectively. I guess like the point is that like if you're following news on your company and the CEO and what he's doing, you can kind of see, you can kind of like, you kind of know like what's going on and like how there's been problems, and you can kind of tell like Elon is like struggling to manage both Tesla and Twitter effectively. I think it's very important to like, look at news.
Yeah, I agree too. Like, it's important to, have something you want to do and then have evidence to back what that action up. So, you know what you're doing. But like, there's also like cases like on Reddit when you're like, oh my god, buy AMC YOLO, like absolutely nothing, no evidence, and then everyone's like, hell yeah, I'm in, and then it actually works. Like, it's actually crazy about how like herd mentality in these cases works. But in my opinion, uh, I guess it's smart to stay away from those because it's certainly not a controlled event.
Um, yeah, no, I think like keeping up with the news and like what that company's specific news pieces are is like really important. But I think it also kind of like matters the type of investing you're doing or like your goals for that. Like if your goal is to in boom, 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 3 months done, like you want to make a couple $100s, then yeah, like that's really important. But then if you're like trying to invest in like the long term and like look at your portfolio a couple years later, like one small event isn't that impactful if you believe that the stock itself will be able to like continue an average trend of like being able to go up. So like I think obviously keeping up with the news is important, but choosing what you do with knowing that knowledge is also like very important too. Depends on like what your goal is with your stocks and
Yeah,
portfolio.
I definitely agree with that. And like, so a major pro I'd say for investing early is that you get more opportunities to earn money and build up your portfolio, and maybe over time you could like maybe like compound your interest, I guess, like because like some stocks actually give you like some interest back for just investing, holding their stock for like a year or something. So like, do you guys think that's like I would say like maybe like applicable to this argument? Do you think like do you do you think that like that's like a feasible argument for like starting earlier?
Yeah,
Like
Yeah,
definitely.
yeah, because I feel like this there's a saying like time in the market is more important than trying to time the market. Like if you're like confident in a stock, you've done research about the fundamentals, then even if it goes like no matter how volatile it is in like the beginning, you know that in the future you like the direction where this company is going, and you're confident that it's going to continue to grow. Or like as you said, like some stocks give out dividends year over year, and if you're just holding, it's like a good way to earn passive income. So I just think like yeah, that's a good point for starting early.
Yeah, definitely. Like, um, through and then like the especially like the Wharton investment competition, like it really opened my eyes about like how maybe holding is probably like the best strategy for especially young investors because um like from what I have seen, only in certain cases like hedge funds with like a 10-person 20-person team running simulations, whatever algorithms, can actually like make decent profit off of like day trading as compared to you as an individual. You can't really gain that much there's too much risk involved, like doing day by day buying selling. Like I think it's a way better idea to find a stock you like or find a few stocks you like and then just buy it and hold it and then wait for that compound interest to kick in.
Yeah. I think there's like a lot of young investors might be like, oh my God, look at that manager or like look at that person who's on Wall Street making all of these things and they're doing all of that. And I think like it's important to realize like they are professionals and have like most of them have gone through like years of school and have like went through the best possible business schools out there and like have a lot of that experience. And then I don't think like that's kind of copyable onto like younger investors because at the end of the day, like someone who has had 10 years, 20 years, 30 years of experience is just going to be better than someone who's doing it for the first 2 months. And so I think there's also kind of like a danger in trying to follow like what a professional is like. Obviously, I'm not saying don't like that's not what I'm trying to say, but like if they're moving a lot and they're like making all these trades, I don't think like younger investors should like follow their every move because that's like kind of risky and like their goals are probably different than like someone who's just trying to get experience.
yeah, absolutely. I feel like definitely what you said about like they they've obviously like the hedge funds, the like people in like those big in like investing like companies, they've obviously been experienced investors. They've also probably also like been in the same place when they've had like 2 3 years of like investing, and like eventually over time they became like more financially literate for the future. And I feel like, do you guys think investing is like one method to like be like is it an effective method to become more financially literate for the future?
Um, Financial literacy, I guess, like if you get started investing early, all the skills about like analyzing what's going on in the market, what's the macroeconomic effects, like all the small details, I guess those skills also come with also like investing early on so you have more time to develop those skills. But also I believe financial literacy and like the aspect of like personal finance definitely also comes from like parents or like other experienced people doesn't really necessarily come from investing, but investing definitely contributes a good portion of like understanding how to generally how money works.
Yeah, I also feel like I also second the claim that like parents and like guardians and like people who are like that they can also like help you like become more financially literate. But also like I I feel like investing can give you like some like insight into like financial literacy, but it's definitely not like the whole, it's not the whole big picture. Like our my school offers like like consumer education course to like to like boost your like financial literacy and like financial like knowledge. And actually investing was like a actually a pretty small part of that course. I mean, obviously like it's like something that like people explore, but there's like so much more to like just financial literacy than just like investing. Do your schools like offer like financial literacy courses at our school? At your schools? In my school at least it's a requirement to take.
Requirement?
Yeah.
I don't think my school has a requirement for that, but the
Does this
classes for those financial courses usually for seniors.
oh
Our school does. It was like it wasn't like a course per se. Like there are courses if you want to take them, but like the required thing that we had to take was in like seventh, eighth grade. And it wasn't even like a course. It was like a 3-day field trip where we went to like this other place and we learned about like financial literacy, but it wasn't like stock market financial literacy. It was things like, oh, like be careful with your money. Don't go out and buy like $20,000 shoes, things like that. And like retirement things and like taxes, things like that. Not like, oh, hey, you can invest in the stock market. So that was an interesting thing. But going on that field trip was interesting. Did you guys have anything like that? Like going on a field trip to learn about financial literacy?
uh not in my experience. I don't know about Kyvan and Ivan.
Yeah, we didn't really have any like a field trip to learn about financial literacy.
No, me neither.
Yeah, it was pretty interesting that you guys actually like had like a trip to do it. Like all we have is like just like a class like discussing like financial literacy, a little bit on stocks, a little bit on like income statements, tax forms, and other stuff, savings and other stuff. So like obviously we can see here that financial literacy is like it's like investing is like will
Yeah.
give you some insight, but it's like very like limited
Well,
insight.
that also like highlights how I think schools probably should like as you know as everybody starts having a computer, right? It's easier to access these resources and like investing stuff like that. I think it's more and more getting more and more important for schools to actually like teach financial literacy. So there's less people going on social media and then doing random or like bad ideas, following bad influences and losing all their
Mm,
money.
Yeah.
yeah,
And just like
I
and
definitely
just like oh you can go. Sorry.
okay. So I just feel like I think I agree. I know like financial literacy, like I know a couple states have mandated it already, but I just think like I think most high schools should have or at least offer a financial literacy course because my current school and even like I go to a private school and we don't have any like financial literacy courses. We only have
That's all
like
self study.
yeah, we have economics, but like that's still like very different from like pure finance and like learning how to manage your own money. So I just think like I think it's very important.
Yeah, also like I'd like to like mention like 20% of teens in the United States have investing portfolios, and obviously some of those teens may go to schools that are just like yours that may not have like financial literacy courses. And like I feel like even like though like investing is like limited, like financial literacy can like also like teach them how to like manage their like money, manage their like investments. So maybe if like oh maybe if like this investment is good, maybe you can like allocate this amount of shares, but also like keep amount of money to like support your family. Like at like I like it all comes down to like the financial like situation that people are like living in. So I feel like also like based off of that, like since like so many teens are like investing they have like investment portfolios, like, and like there's obviously going to be more, and like I feel like after the financial literacy courses, more people have been like investing, and also for the people that have started investing, they have been investing smarter. So yeah.
Mhm.
So now we're now gonna jump to the takeaways of the youth investments episode. So what are some of the takeaways that you guys have learned from today's episode?
Well, I guess I think from our discussion, I think it is probably better to start getting started investing early as our society keeps on evolving in order to like gain valuable uh obviously take advantage of like compound interest whatever, but also like to gain experience about like how markets work and how to manage money efficiently. Also like a very essential skill as our world continues to evolve.
Yeah, I think another takeaway that's pretty important is that like being knowing when you're ready to kind of like start investing with like real money. I know a lot of kids like investing is like kind of a hot topic right now. So a lot of kids want to get into it. They want to like make money, right? But you got to be like ready. You got to build these habits. So it's like very encouraged to like start off with paper money, get experience doing different competitions, and really knowing what you're doing before you start investing with real money.
Yeah, that's a good point. I also think like it's important, like as a teenager investing your money, it's important to know that like it's like a learning curve, right? You're not going to come in and make like a 200% return. Like maybe you might, like that's good on you, but like if that happens, that might just be luck. And like after that, if you do start like losing money, that's okay. Like you can't always expect that you're going to forever be making money. And I think it's like okay to realize that like it's important to like be like it's okay, like it's a learning curve, like I'm doing this for the experience. And I think like as we talked about before, it's really important to keep up with like whatever the market is saying. So like just example with Tesla, so like Elon Musk, like if you thought that Elon Musk's behavior was like a really big point of concern, you have to like step back and realize, okay, like something's up with that. Or like, and you have to like make decisions based on real world current events. And you can't just be like, oh, whatever, it's fine. I'll look at this 2 years later. So like it's really like something you should be actively thinking about and like looking at versus just being like, oh, okay, I don't know, moving on. So just paying attention to what's happening and like realizing that you don't always have to be continually making profits is something to keep in mind, and my takeaways from this time.
Yeah, I feel like just like another final takeaway, like doing research before you really like start investing is like really important, because if you go into it too early, you might fall into like traps of inexperience. You might even like fall into like scams, like we discussed earlier on Reddit, like people are just recommending stocks without any like basic any like base. And also like another important thing is like when you're actually investing, you need to like really like follow everything about that company and about like the economic situation and about like the general stock market trends, just the as well as like the stock that you are like investing in. That's like very important. And thank you all for tuning in today as we talk about teens and youth investments. We hope that your year has started well. We'll see you all next week as we continue our journey at Teens for Business.